Hey everybody, Rob Maurer here, and today we're talking about some new comments from ARK Invest's Cathie Wood on Tesla stock. We've also got an update on the next generation full self-driving hardware for Tesla, news on Tesla Energy, some lobbying that Tesla is doing, and a couple other items as well. Pretty good day for the stock markets overall today. The S&P, Dow, and NASDAQ all up, but looked like maybe a little bit better of a day for more value-oriented stocks. The Dow up 1.5%, the NASDAQ up just 1%, and Tesla was positive on the day, but trailing behind up 0.2%. Closing at $753.64. As far as headlines around the stock today, what seemed to be getting the most attention was a comment that was made by Cathie Wood of ARK Invest yesterday at the Morningstar Investor Conference during a debate. That comment was then picked up on and led to some intentionally vague headlines here. Market Watches, for example, saying Cathie Wood is ready to sell Tesla shares if they hit this big level. Bloomberg at least giving a little bit more context, saying Cathie Wood would sell Tesla next year if it reached $3,000, which even then isn't really exactly what she said. The actual quote, which we'll get to, is more nuanced, but even before that, you have to understand the context, which again, this was in a debate and the person she was speaking with was kind of pressing on when is it responsible to sell your successful companies as a fund manager to then get into other opportunities. And this person pushed her a couple times to give an answer on this for Tesla, specifically as it relates to ARK Invest's $3,000 price target for Tesla for the year 2025. So the question was, if Tesla were to hit that next year, would you sell it? So Cathie's reply was that, quote, if nothing were to change in our outlook and we got to $3,000 next year, my guess is that we would be peeling out of it, end quote. So a few thoughts on this. I think first of all, ARK already often sells Tesla stock. They do that to rebalance their fund. If Tesla were to shoot up and, 4x like this would suggest, they would be consistently selling their stake on the way up. That's just how the fund operates. In general, they avoid having any one stock be more than about 10% of an individual fund's assets. So if Tesla is already at that 10% level, which in a couple of their funds it usually is, if it were to 4x up to $3,000 a share, then if everything else stayed about the same price, all of a sudden it's 30%, and they wouldn't want that. They would sell down to get back to that 10% level, even if they were still bullish on the company. And if not, then yes, they could continue to sell out of the position. That would be what Cathie is saying there, peeling out of it, reducing their position step by step, maybe entirely exiting their position. So, okay, understanding all of that, maybe not the most interesting topic to talk about here, but what I do actually think is very interesting and makes this worth discussing is an operative phrase there that Cathie used. She said, if nothing were to change in our outlook and we got to $3,000 per share, then we'd start peeling off. The disclaimer, though, at the front of that is very critical because let's think about this. If Tesla actually did go to $3,000 per share sometime next year, I think a lot of us would sit here and say today that if that were to happen, oh yeah, I would sell my shares too, or maybe some of my shares at that level. I mean, that would make Tesla a roughly $3 trillion company, maybe the largest company in the world by market cap at that point. And personally, I've been pretty consistent about saying that my long-term outlook for Tesla is to be a multi-trillion-dollar company. So if they hit that next year, then yeah, it seems like it might be a good time to sell. Why I find this disclaimer to be interesting and why it is so important though is because that's based on the information that I've got today. If Tesla were to actually increase to that level of price, something has probably changed. Whatever has changed, even if it is just something as small as having a little bit more clarity on the trajectory, whatever it is, that change means there needs to be a reevaluation. And this is similar to what we just went through over the last 18 months now with Tesla. Looking at Tesla in even late 2019, you've got a company with a $40-50 billion market cap, and a 4 or 5x on that would have made Tesla the most valuable automaker in the world. And I think if you ask a lot of people in 2019 if they would sell at that point, they would say yes. But then things change, right? You get the Model 3 successfully ramped up, you get the Model Y ahead of schedule, you get the Cybertruck unveiling, you get Shanghai ramped up extremely quickly, Berlin and Texas groundbreaking, Tesla turns profitable, S&P 500 inclusion looming. And then you get to Battery Day, where Tesla becomes very vocal about their goal of eventually producing 20 million vehicles per year, 3 terawatt hours of batteries per year. And then all of a sudden, well, that $150 billion, $200 billion market cap that people would have been happy to sell at looks extremely low. So point being here, if Tesla were to actually get to $3,000 per share next year, there would probably be some grouping of events that caused that to happen. So any prudent investor would then have to reevaluate based on that, which in and of itself, that's kind of why the stock would get there in the first place, right? Investors reevaluating. So it's an important statement there that Cathie made. I do think it's good to think about, okay, what price would eventually make a good sell point, but it's more important to understand what's happening day to day. We got Tesla Daily for that, and how those days are shaping and changing and evolving the long-term vision. just as a thought exercise of how something like this could eventually happen. Not to say that that's what I expect by any means, but just to kind of walk through, okay, if Tesla were at $3,000 per share next year, what would have been the catalyst for that? Well, you've got Tesla ramping up a lot of things here: Texas, Berlin, 4680s, structural packs. These are all things that should both improve Tesla's gross margin and significantly continue to improve their operating margins. And then even with a step up in production, it looks like right now demand is extremely robust. And then on top of that, you have the potential of layering in an $8,000 US EV tax credit. So Tesla's cost of doing business, it's going to go down pretty significantly, but their selling price, it might not need to go down at all. And Tesla's already last quarter at a 28% gross margin. I expect that'll improve this quarter. So there's certainly a path to 30% plus automotive gross margins. And even beyond that, what if Tesla gets to 40%? Last quarter, there was a 17-point spread between automotive gross margin and operating margin. So if Tesla gets an automotive gross margin of 40%, based on that spread, you're probably looking at least an operating margin of 23%, probably even 25%, probably even a little bit higher than 25%. And at that point, Tesla's maybe doing, $20 billion per quarter in revenue. So $80 billion per year. Let's say a 25% operating margin on that. That's $20 billion in operating income on an annualized basis. Maybe 90% of that falls to net income. So $18 billion in net income. A price to earnings ratio of 150 on that would give you a $2.7 trillion market cap. A company with the type of growth that Tesla would be demonstrating under this scenario, I think 150x PE would be pretty reasonable to assign. But even if it came down and it was 75x, which I think would be kind of the absolute low, you're looking at nearly a $1.5 trillion market cap with those numbers. And notice, I haven't even talked about autonomy yet. So the FSD beta going out, that could fundamentally change Tesla's financials too. FSD margins are crazy. If there's an EV tax credit and the beta actually gets rolled out, a lot more people are going to be opting for FSD or the subscription. And what we just walked through for Tesla to get to numbers like that, I don't think would really even require too much of a change in how autonomy is impacting the business right now. And this is essentially all based on stuff that we already know about. So over the next 12 months, what is Tesla going to talk about that we don't know about today? Anyway, main point here being that how the company is perceived, the fundamentals of the business, all this stuff can change very quickly. And I think arbitrarily setting a sell point without considering how those things have changed is a suboptimal strategy. So Cathie isn't saying that. She's actually saying the opposite, that they would consider if the outlook has changed. That's great. Secondary main point here, just be really careful with covered calls out there. Also, just to be extremely clear, that is just an example, just to walk through a possibility that could potentially happen. That's not a forecast. We're just playing really loosey-goosey with the numbers there. That's just mental math. That's not even in a spreadsheet. So please don't make decisions based on any of that. It's really just to talk through an example. All right, so next up here, we've got an update on Tesla's full self-driving hardware. Of course, we know that right now Tesla uses what they call their FSD computer, or hardware 3.0, a chip which has been designed by Tesla but is manufactured by Samsung. But even since unveiling hardware 3, Tesla has mentioned that eventually there will be a hardware 4, and at AI Day, Elon said that might come in a year with sort of the timing of the Cybertruck. Previously, there had been reports that Tesla was considering working with Taiwan Semiconductor Manufacturing Company, TSMC, for hardware 4, but we've got a report here from the Korea Economic Daily, which says that, quote, according to multiple industry sources on Thursday, Samsung is certain to beat bigger foundry rival Taiwan Semiconductor Manufacturing Company to win the contract, end quote. So obviously not confirmed, but pretty strong language being used there. They also say that, quote, Samsung Electronics plans to mass produce the Tesla Hardware 4.0 chip at its main Hwaseong plant in Korea using the 7nm processing technology in the fourth quarter of this year at the earliest, according to the sources, end quote. So that fourth quarter timeline, that does fit with previous rumors we'd heard about Tesla starting the hardware 4 process. But again, Elon said probably about a year, probably best to keep that expectation. It might take them time to ramp up production, validate it, and actually start putting it into vehicles that are going to customers. All right, next up here, we've got an update on Tesla's production for August in China. Remember previously we had the Model Y number, but not certainty on the Model 3 number. So we do have that report like we usually would get from Moneyball towards the end of the month now. And it does match what Troy Cherasaro had previously shared. So Model 3 came in at 19,969 vehicles produced in August. That puts the total at 41,754, combined with the 21,785 Model Ys like we had talked about previously. So we're now just 1 week away from quarter close. We'll hop back into that production tracking and forecasting sheet soon enough. But again, this does match the numbers that we had previously discussed when we had gone through that last. Next week at some point, we'll hop back into that and go through my actual final estimates for the quarter. Next story here, this is tangentially related to Tesla Energy. Tesla obviously partners with a company called Neoen on their big battery project in South Australia, and it looks like the Australian energy regulator there is suing Neoen for some discrepancies in operations in terms of what was actually promised and what was delivered during a 4-month period of time back in 2019. Now, the Reuters article on this doesn't really give much context for what actually the issue is, but it's actually a pretty interesting situation, and there's a good article here from reneweconomy.com.au covering the details. We won't go through all of them because for our purposes for Tesla, there's not really any issues here, but still a good read, so I will put the link in the show notes if you do want to take a look. Anyway, the article here starts off by saying, quote, "Gobsmacked. That's a fair way to describe the reaction of many energy insiders to news late Thursday that the Australian energy regulator was taking the Hornsdale Power Reserve, aka the Tesla Big Battery, to court for allegedly failing to do what it said it could do, and for what it was being paid to do." End quote. The too long didn't read version of this is that basically there was a mistake in one of the settings that caused the energy delivered to be less than it was expected to be, which didn't end up actually causing any issues, and the payment was then rectified, and yet for some reason is still going to court. So we'll see how it comes out. Again, that is against Neoen. So either way, it doesn't seem to be something that would be too impactful to Tesla. Next is an update on a story that we've talked about a couple of times now, and that is NHTSA, which is considering imposing stricter emission standards that were previously rolled back. So there was an article from Reuters last night reporting that Tesla is lobbying for NHTSA to impose those stricter emission standards, which is probably one of the least surprising things ever. If NHTSA were to do that, obviously, hopefully that would be good for emissions, and it would also make Tesla's regulatory credits that they accumulate more valuable, easier for Tesla to sell. So other than that, I did have to kind of chuckle here at something that Tesla did write to NHTSA. They say, quote, "The uncertainty perpetuated by NHTSA's sluggish rulemaking pace is thus compounded by the likelihood of yet another round of litigation," Tesla wrote, warning uncertainty may linger for several more years, end quote. I just kind of laughed because of what we had talked about with the separate NTSB stuff about the head of the NTSB pushing NHTSA to regulate Tesla more quickly. Just kind of an amusing contrast there. Anyway, last story here is that Time has released their 100 most influential people of 2021, and Elon Musk is on the list, which is not a ranked list, but rather categorized. Elon falls into the innovators category from Time. So kind of fun to see that in terms of the description they wrote up. They limit all these to 150 words, so there's not really much there to say beyond just the very basics of what Elon is doing. So with that, we will wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Friday, September 24th episode of Tesla Daily. Thank you.